folks, Dan Frio here with your real estate update for February 6, 2024. There's not a lot of activity out there today other than there's a couple Fed people that sit on the Fed. They're going to be out speaking, and that drives me nuts that day because no matter what they say, the media takes every word that they take, and some take it out of context one way and some take it out of context the other way. So we're going to sit back and watch and see where rates go today. But let me give you an idea what I'm thinking for today, because we have two pieces of data that are coming in. One is home prices. What have they done over the last in 2023? It's going to be shocking to a lot of you guys. And then the next piece of this puzzle is, when is the Federal Reserve going to basically start reducing rates based on the information they're providing us? So without further ado, let's get over to it. So right here, these are the top 6 programs people use when they're trying to buy their first house. You can see rates just spiked yesterday, and we were just here. These rates were just about 6.25%, maybe, not too long ago. So what's causing them to go up once again to these levels over 7%? Let's take a deep dive into this. So the first thing we want to come across is the economic news that we have today. There's really nothing out there, but here's the days that really concern me the most. It's not when we have economic news, when we have people that sit on the Federal Reserve right through here and here that come out and start talking. And here's the problem I have with it. Because you have half the people on the Federal Reserve saying we should keep rates higher for longer, or maybe even increase rates. Then you have the other side of the spectrum that comes out and says, well, rates are too high, inflation's coming down faster than we've ever seen, so we need to cut rates. These people sit on the same committee. So when they come out, it depends on which person comes out and talks. That's going to be market movers, and it could be substantial market movers. So let's go in and try to dissect some of the information coming out today and my thoughts on housing and where rates are going. So let's get over to it. What we saw just yesterday is Federal Chairman Powell. He's the grand poobah when it comes to the Federal Reserve. He was on 60 Minutes, and they keep pounding the table saying, we're not going to reduce rates. We're going to keep them longer for higher. The reason behind all this is the last 3 meetings that the Federal Reserve had, they didn't really do anything. But the markets reacted huge. When the Federal Reserve came out to the time previous to last, they basically said, everything's kind of getting in check, so we don't anticipate any more rate increases. The stock market went up 1% that day. Well, the previous time when they did the same thing, they halted rates, the NASDAQ and the Dow Jones all went up 1% again. Well, what happens is they realize now, when they provide good news to the markets, you see interest rates plummet. I mean, they over-exuberate this stuff. So the market goes, how often do you see the Dow Jones and the NASDAQ each going up 1% in a day? You don't ever see that. So what they want to make sure is they don't come out and say, well, inflation's in check, so we're going to start reducing rates and it's going to be back to normal. The markets are going to go crazy. So this drives them nuts, because if the stock market goes way up and mortgage rates come way down, what's going to happen? Well, you're going to build wealth again, and that wealth is going to create inflation once again. Think of it this way. If rates go down to 4.5%, you're going to have a huge demand supply pushing back into the housing market. It's going to create FOMO again, bidding wars, prices are going to go up. It's going to happen, I'm telling you, folks. If you see that same thing, you're also going to see the stock market, because the stock is priced on its future earnings and things like that. So if interest rates that the Federal Reserve controls, they stay stagnant or start to reduce, that reduce the cost of capital for companies, so now they can create more profits. More profits mean higher stock prices. Higher stock prices mean people are getting wealthier. You get my point there? So they're not feeling the pain. So this is driving the Federal Reserve nuts. They're like, okay, we have huge inflation. We got to bring that down, but everything else is kind of clicking on all cylinders. Okay, so that's basically the context behind a lot of this right now. You can see right through here, Dow Jones. Remember Dow Jones yesterday? I think it was down 200-300 points. Now we're getting it all back. So it's basically just a roller coaster. One day it's up 200-300 points, it's down 200-300 points, and it's all going to depend on what the Federal Reserve says. So there's one piece of the news out today. This is going to drive people nuts, and they're going to say, oh, no, this is wrong. This data is inaccurate. Well, let's just take it for what it's worth. CoreLogic just came out and said home prices increased 5.5% year over year from December of 2022 to December of 2023. So where's that housing crash? I still don't get it. There's not a lot of inventory that we prove on a daily basis. I'm going to have Altos Research with us tomorrow on our live event. They're going to go over their system, and we can pick out spots all over the country to analyze for you guys. So please join us live. We can actually, Mike's gonna plug in some information or data into his software, and he's gonna show you live right on the screen what in the heck is going on with different home prices in different regions of the country. So join us tomorrow. We can show you the facts behind all of this, and he's gonna give us his context on housing prices, because that's his business. His whole business is relevant about what's going on with home prices. He doesn't care if they're going up or down. He's just providing you the data. But this data right here is gonna drive a lot of people nuts, because a lot of people continue to say, a housing crash, we haven't seen it yet. There's still no signs of it based on just this information that just came out, and you can see it right over there. It just came out today. So without further ado, the next piece of the puzzle we want to see is what the Federal Reserve is going to do. So what we do is we go to the Fed Watch tool. Chicago Mercantile Exchange does all this work for us. What they come out and say is, in 43 days and 4 hours, the Federal Reserve is going to meet. What are they going to do? Well, this website tells us this. What's the likelihood the Federal Reserve will change the Fed funds target rate at the next meeting? Which you have to take in context is the rate right now is 5.25 to 5.5. They give you a range. I think it's actually at 5.37 right now. But based on the data that we have, what's coming up at the next meeting? Well, there's an 83% chance they're going to do what? They're going to do nothing, because the federal funds rate is right here, 5.25 to 5.5. Now, there is a 16% chance that they might cut. I think that is completely off the table at this time. But let's look at the probabilities of what they're going to do later in the year. So this tells us just this information. It says the next meeting is in March, then May, then June, July, and you can get my point. You can watch right across through here. So the next thing I want to show you is through here. Where's the probability? So if you look, we're at 5.25 to 5.5 right now. So that is right through here, okay? So the probability at the next meeting, what they're going to do, well, they're going to keep it the same. What are they going to do at the next meeting? Well, there's over a 50% chance they're going to cut. And then from there, the expectations are, I think everybody says they're going to cut in June. I'm saying, based on the data that we're seeing, we're most likely going to probably see maybe a little bit of a pivot in May. But I don't know at this point. The Federal Reserve is just on pins and needles, because they're like, we reduce rates, we know what's going to happen. What's going to happen? Well, the stock market's going to jump, mortgage rates are going to pull way back, and you're going to have FOMO once again, and the inflation rates are going to go up and up. So unfortunately, the Federal Reserve is in a conundrum right now, and I don't know, that's what we dissect on a daily basis, trying to figure out what in the heck they're going to do. Okay, so my expectations are they're not going to do anything at the next meeting. There's probably maybe a 50% probability, but then I think in June they're going to cut for sure. They're going to be basically forced on based on the data that we're going to have coming in the next few months. So that's my expectations there. So the next thing we want to go over is right through here. Based on the information we have today, which is nothing so far, is what's the bond market doing? What's the mortgage rates doing? Well, this is what my screen looks like on a daily basis. I use MBS Live, love it. We have calendars, we have a tracking of the MBS market, the Treasury market, news data, feeds, and all kind of stuff. What I follow here on a daily basis is I follow what the heck's mortgage rates are doing. Why? Well, I'm a mortgage advisor. My name is Dan Frio. I'm a mortgage advisor licensed in all 50 states as well as Puerto Rico. I'd love to help you navigate. Can you buy a house in this market? So how do you reach out to me to find this out? Well, first off, let's figure out what's going on with rates today, okay? So right here, what you're seeing right here is the price of a mortgage-backed security bond. All you need to know is this. If this price over here, the direction of it, if it's up or down, right now it's up 2 basis points. So that means, well, really nothing. The mortgage rates are going to be completely flat right now. But if this number goes up, how I want you guys to understand this is there's a yin-yang effect, a reverse effect. If the price of a bond goes up, it means the yield or the rate on your mortgage is going to go down. Look at where we were right through here. In November, we were started here and we went up, up, up. If you remember right down through here, rates were about 6.25. They continued to go up, up, up to where we are today. We're back over 7%. I'm thinking we're going to cap right around this area, but it based on what the heck the Federal Reserve or a lot of members of the Federal Reserve say today in the media. So my name is Dan Frio. I'd love to help you if you're navigating and try to figure out, can you buy a house in this market? Prices are high. I get it. Mortgage rates are high. I get it. But if you're looking to buy a house in 2024, we'd love to help you. How do we do this? How do you reach out to us? Well, go to the rateupdate.com. What I want you to do is right over there, there's an apply now button. We do things a little bit different. What we do is we ask you a few questions. Instead of you going off and putting in your application, we want to know a little bit about you. What kind of home you're looking to buy? What kind of area are you looking to buy? What's your credit look like? Things like that. Then I can assign you to a mortgage specialist on my team that specializes in exactly what you're looking for. Okay. But if you're there and you're like, hey, can I call somebody? Can I email you guys? Sure. Just go down to the bottom of the website. You're going to find all that information right there. You can give us a call, 844-775-5626, or you can email me directly right there at dan@therateupdate.com. Thanks so much for watching, guys. God bless. Have a fantastic day. Don't forget to join us tomorrow, where we're going to have Altos on to dissect the housing market, and we're going to go into specific areas of the country to show you guys what in the heck's going on with real estate throughout the country. So thanks so much for watching, guys. Hope to see you then. Bye-bye.